Hello everyone, I hope you all had a great weekend and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, today it's been a very quiet day in terms of economic data. As you can see, the only things we've had has been like bill auctions and things like that, and then we've had a couple of speeches from some central bank policymakers. Really today, I think the focus is very much on the Federal Reserve, and as you can see, we had two speeches on the economic calendar there. There's actually one speech as well that hasn't been included on the calendar. In terms of the key themes in the markets today, we've had a sell-off in equity and bond markets, particularly European equity markets, which are still responding now to the comments that we had late on Friday. We had the US markets close Friday more than 2% down, big sharp sell-off in the S&P and the Dow. This was carried through to Asia overnight and has since carried through to Europe. We're around 1.5 to 2.5% lower. Same thing that we're seeing in bond markets as well, with yields creeping higher. And again, this comes off the back of some of these Fed comments, which we'll touch on in a second. A lot of this is relating to higher expectations of a rate hike. Now, we heard from three Fed members on Friday, and it was interesting to see that we had relatively mixed views, although I'd say that's certainly slightly leaning in the hawkish direction, which is why people have started buying more into the rate hike possibility. Rosengren in particular, who is typically quite a dovish member of the Federal Reserve, stated that there's a reasonable case for a rate hike this year, a reasonable case for a serious discussion actually at the meeting in just over a week's time. Now, I think it's worth stating here that the blackout period for the Federal Reserve, I believe, begins tomorrow, so the comments that we're hearing now is the last that we're going to hear from the Federal Reserve prior to the announcement a week on Wednesday. Of course, the actual meeting begins a week on Tuesday, and then it occurs for 2 days, which is why the blackout period begins tomorrow, a week before the meeting starts. And like I say, he said there's a reasonable case for a serious discussion on interest rate hikes at the next couple of meetings. He refused to commit to which meeting he believed or he was going to vote for a rate hike at. I think it was really interesting that he was not just approaching this from a jobs perspective or an inflation perspective, both of which he said was nearing target. In fact, he said the labour market is close to overheating. He thinks next year we could see the US labour market being beyond full employment, which is part of his belief that a rate hike should be considered. But he also talked about the fact that not raising interest rates now could actually reduce the period of recovery rather than lengthen it. And I guess this is a suggestion or alluding towards the fact that in keeping interest rates low for too long can create things like asset bubbles, can lead to poor investment, and can actually create crises rather than create booms. So I think the suggestion that we should see these gradual pace of interest rate rises is actually a suggestion that is actually both because we're seeing close to full employment, but also to try and prolong this period of recovery rather than shorten it. Tarullo, on the other hand, that's Daniel Tarullo, another permanent member of the FOMC, said he wants to see more evidence that inflation is nearing target. Again, I mean, this is slightly dovish, but also there is a hawkish tone to it, and I think this is another reason why the markets have latched onto this. He wants to see a little bit more evidence before voting for a rate hike, but that clearly is an acknowledgement that inflation is rising and has been rising this year and is close to target as well. Robert Kaplan is not a voting member of the FOMC this year, and he suggested his was more dovish again, and he suggested that they need to be patient and deliberate in when it comes to interest rate hikes. But again, he's not a voting member of the FOMC, so when you take the other two in consideration, you can understand why the markets have taken this a little bit more hawkishly, and especially given the fact that the markets were positioned for no rate hike in September and not exactly a significant chance of a rate hike come December. Now, today we've had three more Fed speakers lined up. Two have already spoken already today. Dennis Lockhart, who again is not a voting member of the FOMC this year, said a serious discussion on a rate hike was needed, although weak inflation did make the case for a rate hike awkward. So again, a mixed message here, but clearly he is very much in the camp that it is
close to voting for a rate hike, or could potentially be swayed for a rate hike, although again he's not a voting member of the FOMC. Kashkari, this is Neil Kashkari, again not a voting member of the FOMC. He actually replaced Narayana Kocherlakota on the federal board of Minneapolis, I think it was last year. So not a voting member of the FOMC this year, but again wants to see more movement on core inflation. So maybe more in the dovish camp, echoing the views from Daniel Tarullo, potentially more in line with Kaplan, but again not a voting member of the FOMC. But it is interesting to see that even the more dovish members of the Federal Reserve here are talking about wanting to see a little bit more evidence, which clearly suggests that in their minds it is headed in the right direction, and they are potentially on the fence right now, but could be potentially swayed into the rate hike camp relatively shortly. And finally, we're going to hear from Lyle Brainard today. Again, another permanent voting member of the FOMC. Very interesting to see what Brainard says. If we get more hawkish commentary, more talk of a rate hike and serious discussions at these next two meetings, then we could see the markets respond again. Currently, we're priced in for around a 24% chance of a rate hike at the meeting in September, and around about a 60% chance, I believe, of a rate hike come December, and that could change again if we do see some more hawkish commentary from Lyle Brainard. But again, it's just going to be interesting to wait and see. If we see some dovish commentary, then you could see effectively the markets reverse their gains from the last 24 hours of trading. Commodities is the other key focal point today. We are seeing them come under pressure again. Gold, silver, oil, all in negative territory. Largely driven by the dollar gains, particularly in something like gold, which has such a strong correlation with Fed policy moves, but also with things like oil. We saw the rally in oil over the past couple of weeks on the back of the press conference that was called between Saudi Arabia and Russia. They agreed to cooperation on interest rates, a cooperation on oil output and maintaining stability in prices, although this really has led to nothing. We saw the big drawdown in terms of the inventory data from EIA and API, which helped drive oil higher. But I think this is seen as a temporary move, which is why the stronger dollar has now weighed on oil again, and it has fallen about $3 or $4 below the $50 level, which it did creep above at one point last week. From a technical standpoint, it certainly looks a little bit more bearish now than it previously did. But again, the key focus today is very much the Federal Reserve, and over the next week, while we do have a blackout period in terms of Fed speakers, I do think it is going to remain the key focus. It's the next key risk event for the markets. We do have the Bank of England this week, but again, they're not expected to move, especially following that inflation report hearing. We do have more data to come as well, things like US retail sales later this week, but everything is going to be really building up towards the Fed decision, which is due next Thursday, with the meeting beginning on Tuesday. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.